Congratulations! You just received some money. So now the question is, what should you do with it? What could you do with it? Before you answer, let's take a moment to talk about investing. When you invest, you put time or money into something, hoping that you will get a return greater than the amount you put in. Like when you invest in learning a new skill, or how all the hard work you put into school is an investment in your future. Investing your money is the same. It means putting your money in something that you expect will allow your money to grow or appreciate in value over time. The best way to explain is to show you. Imagine you have $1,000 and you invested in something that pays you 10% every year. We call this 10% your annual return. At the end of the first year, you will have made $100 on that $1,000, so now you have $1,100. In year 2, you will make another 10% on that $1,100, or $110, bringing your total to $1,210. So assuming you don't take any money out, at the end of 10 years, your money will have more than doubled. Pretty cool, right? So let's go through some of your options again. One option you have is that you can put your money in a savings account. A savings account can also be one of the simplest and safest way to invest. The bank offers you a small interest rate on your money, and you collect that interest over time. Right now, the interest rate offered by banks is 1.30%. So if you put $1,000 in a savings account, after 10 years you will make an additional $137.50. Savings accounts are a good place to put your money if you know you're going to want to spend it in the next couple of years, and you want a safe place to put it where you can make a small return. Your annual return isn't very high. But on the other hand, you won't lose any of your money. If you put $1,000 in, you will always have your $1,000 plus whatever interest you make. But you have another option with the money you received. You see, as with other things in life, there is a trade-off between risk and reward. The bigger the risk, the bigger the reward. Another way to think about it is that if you want a bigger return on your money, you're going to have to take more risk. Savings accounts aren't the only thing you can invest in. People invest in lots of different things, like buying real estate or government bonds or stocks. If you are new to investing, a good first place to start is stocks. When you buy a stock, you are buying a piece of a company that is publicly traded on the stock market. This piece is also called a share. The price of these shares change every day. Sometimes they go up, sometimes they go down. The most common way to make money is to buy a stock at one price and sell it at a higher price. Let's say you bought $1,000 worth of Costco shares on 12/31/2009. The price of one share was around $59. So with your $1,000, you would have been able to purchase 16 shares. On 12/31/2019, the price of one Costco share was around $293. That means your shares are now worth $4,688. In 10 years, your money would have more than quadrupled. But remember how a higher return means higher risk? One thing that's important to remember is that not all stocks go up, and they don't go up all the time. In the next video, you'll learn more about how to invest in stocks. In the meantime, as you think about what to do with your money, you are never too young to start investing. A good rule of thumb is 100 minus your age is the percentage of money you should put in riskier assets. So if you are 15, you can take 15% of your money, set it aside in a savings account, and invest the other 85% in the stock market. You can take more risk when you're younger because you have time to recover. Imagine if by the time you are your parents' age, $2,000 that you put in the stock market today was worth $15,000. That would be amazing, right? Like all things in life, the best way to learn is to practice. And the best way to get comfortable with risk is to try.